Hey, it's Craig Vetter from Vetter Consulting. I'm just here with Dan Miller from TMG, and Dan and I are going to talk about some of the success he has had recently utilizing the Tactical Mortgage Solutions app and helping his clients save money. So first off, I just want Dan to give us a quick introduction of yourself, take about 20, 30 seconds, who you are, kind of where you're located, and then we'll talk about how you're using it.
Sounds great, Greg. I appreciate it. Thanks for having me. And yeah, I'm excited to share the progress we've had here with the app. I'm with the mortgage group, TMG Mortgage Group, Miller Mortgages in Victoria. I've been in the industry for 24 years, but I've been brokering for the last 14 as of November, actually. So coming up to the anniversary. Prior to that, I was retail lending or underwriting in a wholesale broker center as well. But yeah, I came over and I joined the mortgage group in 2016.
Nice. That's
And yeah.
beautiful. So, yeah. And I guess, the one thing we talk about is utilizing this app. So first thing I want to talk about is like so far, kind of give us the numbers, like, because everyone loves
Yeah,
numbers. We're in the mortgage business. It's all about numbers. So
absolutely.
how long have you had the app, and kind of give us a little bit of rundown of, what it looks like, and the bottom line kind of number of units and volume that you've got from it.
Yeah, so I had my first sit down with the app last Thursday, so a week ago today. And since then, I've done a variety of different lenders and different structures. From that, I've had 17 new files. We're up to roughly, again, and we're putting them all through right now. That's going to be approximately about 7 million in new volume in
That's
1 week. Yeah.
that's awesome.
Yeah, it's been great. And, like I said, there's a variety of different lenders. So we're looking at all sorts of different structures and scenarios. And the scenario we'll walk through today, I'm happy to share sort of how we've done the process.
That would be amazing. Yeah. And then I guess just for me, because I always look at, like, it's great to have the number, the volume,
Yeah.
that's great, but what is the impact on your clients?
All the savings are anywhere. I mean, again, they're going to vary from file to file. The largest one I've had actually so far, this was just yesterday, on a month-to-month payment savings, this particular client is $1,900
Holy
on a
cow.
month-to-month savings. So they were in a B deal, so obviously it was a bit of a stretch, but it was a 3-month interest penalty. The yeah, month-to-month savings, which again, and I'm finding that to be a big question right out of the gates is, what's my month-to-month savings? I know we all know inflation and everything's more expensive. So if we're saving a little bit or a lot in that case, it's been advantageous across the board. And again, out of all the files that I've reached out to, I've had two no's and 2 no answers so far, which I will discuss how we follow up on that. And one of the no's was due to a family influx of money, and they're actually looking to pay down the mortgage. So they're in a bit of a different spot. Not too many people are in that scenario, but again, even the touch base, and it was great to chat with them, and I'll be helping them with the rewrite on that. So it was great to touch base. So even it has other advantages as well, which is fantastic.
Absolutely. Like I always say, this is, you never lose with that reach out, right?
No,
Like a
yeah,
no losing
absolutely.
scenario. So
Yeah,
perfect. I appreciate that. So that's amazing. So I'd
yeah.
love for you to show us exactly, like, kind of what you do with your client's information, how you kind of run through utilizing the Tactical Mortgage Solution software, and then what are your next steps in regards to reach out to clients. So if you could show us
Sure.
that, then that'd be amazing.
Absolutely. So I'll just go in here and share my screen with you, Craig. Just give me one moment,
Yeah.
and we should have that up right away here. There we go. So can you see that now, Craig?
Absolutely. Yeah. Donald Duck. Love him.
Donald Duck. So yeah, we're this is an actual scenario I'm going to be using. Obviously, Donald isn't one of my clients, but I wish he was. It'd be great. But we'll get started here with Donald Duck. So
Perfect.
this is sort of the first screen when you're working with the TMS system, and build the contact. You put your information for the telephone number, Donald at Disneyland.com, and then from here, he's a client, and you start to build the process from here. Obviously, you can actually email through the system. The scenario I'll be showing, I didn't do that, but I'll explain sort of how I've done it accordingly. But there's a lot of options in this program and this app that's amazing. So I've already proactively built this in here, and the rest I'll sort of walk through as we go through the process. But this is where I start. So I come in and I've run a report, I should say, actually proactively. I've run a report through whatever system you're using, Expert Pro, or internal systems, and I pulled up some rates in a rate range that we were looking at, which you'll see as I go through the process, and we get
Perfect.
started on this scenario. So from here, you just hit create, then you create the profile for the client. Now my screen's a little different, so just bear with me here. So now I'm Donald Duck's actually right at the top, so we'll click on Donald. So I'm just over here. Hopefully you can see my cursor.
Yeah.
I'm gonna click on Donald. And then from here, we want to start a strategy session. Over here, strategy session. So let's just have to move this here. Excuse right there we go. So new strategy session. So over here, I've just moved the screen. Hopefully you can see that. So I'm gonna
Yeah.
do a strategy session. Here's where we put Donald. So Donald pops up because we've already built that or created that contact. But he's in our
Awesome.
system now. And then just down there, hopefully there we go. Yeah, perfect. So now along the top toolbar here, obviously this can be a home refinance. There are a number of scenarios, but we're tailoring this one to trying to save our clients money, obviously coming out of a slightly higher interest rate into a lower market right now. So we hit a home finance, strategy sessions. So this one is a CIBC client. So I'm going to put CIBC savings. You can name this anything you want. Obviously, whatever is going to help you remember or however you wish to propose it. I'm going to keep this pretty straightforward. This is a CIBC client who we have the opportunity to chat with, and this is a true scenario. So I'll get started on this. So from here, you can see we have the CIBC savings. So you could build a number of strategies as well. Right here, you could build another strategy scenario if they want to see variable. There's a number of options. We're looking at a fixed rate to a fixed rate in this scenario. Currently a 5-year term. Obviously, it was what they were seeing at. So now right here, mortgage refinance breakdown. You click on this, and then I'm going to scroll down a little. So here's where we start the process. So the first thing is you can enter the name, of course. So I'll be calling this again, put Donald Duck in here. So this is Donald scenario. The value of this property. So when you would have this client information in your platform, whatever you're using. Right now, I'm currently using Expert, Logic's Expert. So I went in and I've proactively written out. Now I've built a template for myself, and in this template, it's I research first before I come to this screen, and I find out the current balances with a quick amortization schedule based on their payment schedule that you had in your system, of course. I find out what their current payment is, of course, what their original amortization was, what term it was, and then also really important, and this is very important when you're calculating the penalty, of course, because it will pull up the posted rates, historical posted rates. The system has all of that in there. It's brilliant. So, of course, you really want to make sure you get the maturity date. So, and then, of course, the lender. So the appraised value on this property is actually 1.4 million.
Beautiful.
So you put that in there. Now you come down to this section right here. So here's where what is the process? Well, we're going to do a mortgage, but you can add a number of different scenarios. I'm just going to keep that open for a moment. You can right now you're doing a mortgage. You can do the mortgage plus if they have a home equity line of credit, you can put this right under another scenario. So you can put in here, you could put mortgage, you could put home equity line of credit. Some people I've had them find wrap up some credit cards. Of course, 19% credit card, they're going to have substantial savings on that. So there's consolidation options as well. So now you click on the mortgage right here, and here's where you start to input the information. So here's where I'll put CIBC refinance is what I'll call this.
Perfect.
The lender again, and I'm not picking on any lender specifically or anything like that, but this just happened to be the scenario. So obviously you can see, and I'll just go back to that screen. There's a number of lenders. So you have the opportunity to, and we all like this opportunity sometimes, but if you get the opportunity to have an RBC client come over, great. They have their fair share of ours. There's no question there. But so every lender is in here. So we respect and appreciate each and every one of them. But when we're doing these types of transactions, this is what we look for. So the CIBC, now this is a fixed rate.
Yeah.
So it's very window based. It's great. It is a closed term. It is this was a 5-year term. Now, here's again where the very important is you put your maturity date in here. So come along. Now, this advanced in 2023. So my maturity date is September 8th, 2028. So I'll click on the year, scroll down to 2028. Of course, the month, I'm just going to move this guy over here. There we go. Just drop back one, and then September 8th. So there's my maturity date. So then, of course, I put that in there. Now, the interest rate on this file, just give me 1 second. Green just went blank, of course. 1 second. There we go. So this particular file was 5.79 for the client.
5.79. Okay.
Fine. Now, right here, this drop down is going to pull up the historical posted rate in that time. So this is where we're going to calculate our penalty from. So 6.79. So we'll close that and we'll put in here 6.79. It'll calculate the discount, of course, that the clients were provided.
Yeah.
There we go. So they had a 1% discount. Now, our outstanding balance on this mortgage, again, I proactively found this in Expert, based on the amortization schedule of 854, 840. and 47 cents.
Perfect.
They are paying monthly. Now, you also want to, as I said, with that template that I proactively built and just repeat it on every scenario we've done, you want to put in the mortgage payment they're currently paying. And this, if you're out a little bit, you'll see it in your amortization, but it should be correct if they're paying and balance is right. This was $5,049.64. So that's the current payment.
Perfect.
And 28 years and 10 months remaining. Exactly right. So here's your penalty calculation. Now you have, I'm just going to scroll back up here. You have 46 months just underneath that maturity date there remaining in that term. So as you scroll down, there's your penalty calculation for 46 months. Now, obviously, we all know they're going to take the greater of the two. So when you right here, this box, you can include it in your refinance, or you don't have to. And I'll show you both scenarios because I have had 3 clients now who have chosen to pay their penalty, stroke a check. So they'll be paying that at the lawyer when they go. And of course, the savings are going to be greater, without capitalizing that penalty, of course. So in this scenario, we're going to include, so I'm going to pick this box, we're going to include in the refinance this scenario. Of course, we're going to click 46 months.
Yeah.
And it's going to scroll down, of course, 3 months interest on this particular scenario. I don't know why that's doubling there. I'm just going to quickly delete that. Oh, I did that, but probably hit it twice. Okay, so now we're going to scroll down here. Now here's the scenario builder. So include payment. There we go. So we're going to put in here now the new mortgage. So this is what we can offer Donald. So he's in a 5.79, of course. So we're going to come in here.
We're not going to move him to a 5.95,
no,
are we?
that doesn't make that doesn't make a lot of sense. So let's do that. So we're going to do 5 years. And again, now he started with a 30-year amortization. I'm proposing another 30-year amortization. So you put in here 30 years. There we go. Now the rate right now is a lender, and again we can disclose lenders and so on and so forth. But for fairness, all lenders, I'll just sort of put in a rate that we have. But we do have 4.44 available right now, fully functional, not a limiting product or anything like that, on a 30-year, 5-year term. And so that is actually a promo with a bit of a time clause on it. So we are putting a lot of clients, and we are getting them through quickly. So those 17 deals that I did mention, right now we're targeting to have those all closed within a month. So by middle of November.
That's great.
So we're pretty excited about that. I mean, it's going to be some long days, but clients are excited and we're excited. And obviously, it's going really well. Beautiful. When we put that in there, now here's where you're going to start to see the savings. So again, as I said, the biggest savings that we find, or that I'm hearing, feedback is, what am I going to save month to month? That's the biggest thing. Now, when you're re-amortizing, like you said, Craig, we're in the numbers game. We know we're re-amortizing this out. Obviously, the balance at the end of the term is going to be a little bit different than it would have otherwise been. So it's, again, this TMS is amazing. It tells you the before and the after. Before, they would have had a balance if they left it at 806,086. However, we're capitalizing a penalty. The balance is going to go, and we're re-amortizing, but there's savings. So their savings right now on a month-to-month basis is $724.42. So, I mean, and then when you're chatting with the client, and I'll go through the process once we reach out to them. So you take that 724.42, and even if you go over the 46 months, again, respectfully, apples to apples, compare what they have left. So you're doing that over 46 months. That's $33,323 just in payment. Again, that's just on a month-to-month basis. But when someone sees they're saving $742 a month, I mean, that's a lot of groceries. That's, wherever they wish to allocate it, right?
Absolutely.
It's fantastic. And then you have, of course, your savings, your deficit on the refinance result of, the $32,189. Now, this is with the capitalization of that penalty. So that penalty.
Yeah, you put that in there, right?
Yeah, so that's in there right here. So we're capitalizing that already of the 14,000. So if you want to calculate the net, obviously savings after all, you can calculate the two savings and subtract your expenditure. Now, there's a lawyer bill involved as well. Our company, myself, we're doing a little incentivization there, but you can come up here. This is great. This is where you can really start to add if somebody wants to put in a car payment or so on and so forth. I will show you just quickly here. I put add other item to refinance, and then I click it. I'm going to put here lawyer. For them, that's going to be $750 just for them. And
yes, you're already pricing in the total refinance cost. Like worst case scenario, this is where you're going to be.
Absolutely. So, they're not writing a check for anything. They can capitalize absolutely everything. And this particular, Donald's got some good equity in his home, so he can easily do that. And so here now you can see it's changed our month to month slightly, because you can see down here, we're actually counting that $750. So it accounts for any expenditure. So the transactional expenses are all accounted for. As I said, I've had people write in car loans, some credit cards. They all will start to line up right down in here in the after. So now, once I've done this, I haven't even chatted with Donald and his family yet, but now we reach out. So what I do, and I'm just going to switch screens here really quickly, so you can see what we do now. Is, of course, we have Donald at Disneyland.com there. So we're going to send Donald an email. So right here is the email template that, and I'm happy to share all this. Obviously, everybody has their own strategies with this, but this is what I've done.
Perfect. Thank you,
we're
Dan.
pretty happy with how it's turned out. So I'll just sort of have that there. But we're reaching out, obviously that's after summer. Some of these people, that I have reached out to, we just actually chatted to a number of months ago. So it's fairly fresh, and I've tailored this a little bit, depending on the client. But this is the general template we have had, and most of them are replying within hours, to be honest, which has been actually amazing. And I wasn't actually expecting that kind of reply time, but it's been phenomenal. And the feedback from the clients has been exponential. As the numbers are starting to show, and this is
And
why
you're not even putting those numbers into this email. You're not even, so you really want to blow them away when they get on the call, right? Especially with that Donald Duck savings. Okay, I love it.
Right. And on the call, on the Zoom, I like the Zooms, and because you just see the reaction and almost like confused. They're like, "This is too good to be true," but the numbers are right there, right? And I've had them say that, and it's and it takes a little bit of slowly discussing it, and the savings are there for sure. But again, capitalizing the penalty, explaining that, and it's very important to explain it clearly, and make sure everybody's comfortable as they proceed. But the numbers are there, and again, in my initial email contact. I'm not trying to not disclose it, but I feel it's better to explain it when you have the opportunity to chat with them, either in person, Zoom, or on the phone. So that's definitely what I've tried to target here with ours, and it's turned out great. So now going back, I'm going to go back to now on the process from there. Give me 1 second. Okay, Donald. There we go. Now we have Donald. Donald's replied, and we have a Zoom meeting with Donald, and the first thing that we discuss is obviously where the numbers are at, how we can save money. And again, everyone's going to be a little bit different, but I have found a very common reply or common response is, what is this going to save me per month? And that's honestly probably the first thing. As I said, we had the extreme, but the smallest savings, and this individual still did it, was $169 a month, I think. Still the savings. They were still happy. Their interest rate, this particular individual was one that did pay the penalty out of their own pocket. The penalty wasn't substantial. The mortgage wasn't, a large mortgage. So that is an option. And again, a lot of people will do that, or will do that if the penalty is not that big. So it's if you do have that opportunity, or the client who does want to do that, all you do is come up to their mortgage right here, and just take this out here. Yeah. And now if you remove that,
difference.
It's going, now you'll see the savings. So obviously this particular scenario is going to be substantial, but they'd be looking at $14,000+ check. But here's where you see the big savings right here.
Yeah.
Right. And also the term, right? So I mean, it's amazing. And this app, it does it all for you right there. It's great. I'm just going to go back to this, because this is more, I would feel common, especially with that sizable penalty. And then from there, obviously, they reply to the email, and we sit down, we go through the process. I explain this to them. I do send out an email. You can email, as I said, through this system. It's fantastic. It's great. It shows them a great breakdown. Myself, I've actually been extracting it from this and sending it to them from my own email, but you can do all that. And it's a fantastic tool in that regard, in many regards, but it's a fantastic tool in that regard. And then obviously, if the client is happy and they want to proceed, we get our KYC, which is obviously new to our industry. We get our KYC forms going, and we update the application. We send them a template, first of all, with this information, document request. And again, we're trying to expedite this by middle of November. So we've been sending out a lot, and we're getting a lot of documents in right now, and it's been fantastic. I couldn't be happier, and I really hope that this works out well for everybody, because it's a fantastic tool.
I love it. I just want to say, so happy the success that you've had with it. I just want to, thank you for sharing this as well. It's amazing when you look at, the results that you've had and the amount of short period of time and just connecting with clients. And I think the one thing I look at this, and Dan, maybe, I'm not a mortgage broker, so I'm very little knowledge in this stuff. But I mean, as we move forward with the rate decrease environment, is this tool going to be beneficial for you, not just right now, but to come? How do you feel about that?
Absolutely. I mean, yes, that's an immediate absolute yes. And I feel not just in the fixed market, which I think that is something that we're going to be targeting for sure, as we're seeing, the bond market shift. Obviously, the prime market yesterday with the half-point stimulus announcement, that was great. And had some opportunities to listen to some amazing speakers about that recently, and that trend will keep going as well. So if you have your variable rate market clients, and I'm sure we all do, if you have some variable clients, as the spread or the discount, hopefully comes a little bit back to what historically where it is or was, sorry, that would be a great target market. Speaking again directly to the fixed market, every time as we come down into maybe more of a stabilization of the rate market in the fixed, where I think there's every sort of roll coming out of it. The right now we're in the mid fives, as you can see by this 579, a little bit higher.
Yeah.
Maybe in the low fives is next, and then you just keep going down. It's a tool that'll I feel really benefit a lot of contact with your clients, a lot of obviously service levels is great. They're always happy to hear from you for sure, especially with an offer like this. So maybe on the next fixed rate drop, as we come down a little bit lower into the low fours, maybe even we're starting to say threes again, which I think will make us all smile, including the clients. Now you're maybe going to target the 5.25s or wherever that may fall. Again, lender specific, IRD calculator specific, but it's something that I think you can utilize and really as a service tool, if nothing else, but definitely something that I think will really benefit our books as mortgage brokers and our relationships with our clients. And just overall service levels are right here at our fingertips, quite literally.
I appreciate it. Thank you so much today for your time, Dan. I really, really appreciate it. I appreciate you walking through this. And we'll include the template Dan has offered to share that. So we'll include that. And if you have any questions, feel free to reach out to Russ. He is happy to help out. But this is awesome. Don't spend all the money in one place there, Dan.
I'll try not to. No, and I really appreciate your time, Craig, and obviously Russ as well. Thank you so much for the opportunity. And I really hope this helps everybody out there.